Well, today, April 30th, is the deadline to complete and file your 2020 tax return. Despite pleas from tax professionals to push the deadline back, COVID-19 has made everything a little more difficult. What with the benefits, the work-from-home tax breaks, and for many, this is a particularly challenging year. So for more on this, we're joined by Kelley Keehn. She is a personal finance educator, and she joins us live from Edmonton this morning. Good morning, Kelley.
Good morning, John. Happy Friday. I know it's not a happy day for many people, but we will do our best to get through this day.
Well, let's talk about some of the challenges or barriers that you've heard this year. What are people encountering doing their taxes after the year that it's been?
John, millions of Canadians have been just treading water financially, and tax time has been like a big anchor on their neck. They are just struggling to not drown. And as you said, there was a glimmer of hope this week. There were so many calls for that deadline to be extended. Unfortunately, that did not happen. CRA said that they did not want to delay payments for those that need it so desperately, and they need people to file on time. That's little relief to people that have had so much stress in their life, maybe locked out of their accounts, or even yesterday, as recently as yesterday, having technical difficulties getting into their CRA account or being able to contact the agency if they had questions.
Yeah, so maybe for some it'll be guilty with an excuse or excuses, but what happens if you aren't able to meet the deadline?
Right. So we should also say that this is a deadline for those that aren't self-employed. If you are self-employed or your spouse is, you actually have till June 15th to file. However, taxes are due today if you owe them. So if you do need to file today, that is your deadline, and you don't, you are facing a very hefty penalty of at least 5%. And on top of that, 1% per month of compounding interest if you're unable to pay. So if you want to avoid that penalty, you owe tax, it would behoove you to do whatever you can to clear your schedule to try to get that done before the end of today.
Some have deemed it a sort of alphabet soup of government payments and breaks and accommodations that have been made to people over the last year for a variety of reasons, depending on your situation. So let's talk about some of those new factors that have gone into the returns this time around.
Right. So many people working at home, this was the big question mark last year. They've had to incur more expenses, utility costs, whatever they were using at home to get through their workday. So CRA for this tax season wanted to really simplify it. Again, John, this is not for those that are self-employed. Things are pretty much the same. They're writing off a portion of their home because they usually worked at home. This is for traditionally employed people that are either salaried or commissioned. And what you want to know is that there is this temporary flat rate method for claiming those work at home expenses. You don't have to provide detailed receipts or things of that sort. It's a simple calculation. $2 a day to a maximum of $400 per year. Now, you do have to meet some criteria. You needed to work at home. You are required to do so because of COVID, or your employer required you to do so. You were working at home for at least 50% of the time and 4 consecutive weeks. Now, $400 doesn't sound like a lot, but that does add up if you and your spouse qualify. Maybe you had an adult child at home too. Now, John, if you say, oh, forget it, you spent way more than $400, especially if you are a renter. Rent is one of those things that you're able to deduct with these new work at home expenses. So if you are a renter and you feel that you certainly spent a lot more than $400 working at home, there is the detailed method. Now, with that method, there's a lot more things that you can write off, but you are going to have to prove to Revenue Canada, so you're going to want to keep those receipts. Again, same criteria, had to work at home at least 50% of the time, 4 consecutive weeks. If all of this is sounding like a lot, I know it is, just head to canada.ca, and they've got a really great explanation up on there if you should do the temporary flat rate method or the detailed method.
We are, of course, a long way away from life as normal, but let's be optimistic, looking forward to reopening at some point. And we've seen, of course, so many Canadians hit so very hard, some, though, managing to save. So as things open up, how should people think about their spending?
John, we are needing some hope, aren't we? And we've been hearing that as soon as things open up, it will be like the roaring 20s. We're already seeing in the US a lot of restaurants, you can't even get a reservation for weeks because people have that pent up anticipation. And that is great for the economy. It's great for jobs. It's wonderful for all of us that need to get back into work and into the flow. What I do caution, and I was a contributor in New York when the financial crisis was happening, and the US really learned their lesson when that happened. There were so many foreclosure signs during that crisis, you couldn't help but viscerally get what was going on. Not so much so in Canada. And while we do want to get back to normal, we want to spend, we want to have fun, and we deserve to, we want to maybe really glean and galvanize these lessons that we've learned during this pandemic. The importance of a robust emergency savings account, getting those high interest rate credit card debt paid off no matter what. If you actually had to resort to one of those payday loans that, yes, can be as much as 500% per year interest. Again, sounding like a lot. There's folks like nonprofit credit counselors to help you out there. Don't let debt stress you out, but at the same time, let's take all the lessons that we learned financially and otherwise during COVID as we balance getting back out there when we finally reopen.
Good advice. Thanks for this, Kelley.
Thanks, John.
Kelley Keehn, personal finance educator, joining us from Edmonton this morning.